One of the biggest financial tools a homeowner can have is home equity. It's the positive difference between what you owe on your property and its current value. According to a TransUnion study, as of last year, untapped home equity reached an all-time high of $14.4 trillion with a T dollars, about $1 trillion more than its pre-recession peak in 2005. And with us now is Optimal Capital Director of Strategy Market Analyst, Frances Newton Stacy. She's here to break down Cashout refinancing, a loan mechanism that taps into your home's equity. So Stacy, explain Cashout refinancing and why would someone want to do this?
So you can utilize your home equity without having to get a home equity line of credit, which usually has a higher interest rate, and just get your mortgage rate, which mortgage rates have been going down, interest rates have obviously been going down, to get some cash out of there. And the benefits of doing this are you can do home improvements, which improves the equity of your home. You can pay off credit card debt if the credit card debt interest rate is higher. You can do these things. The trap is if you, number one, don't get the greatest interest rate in the world, and so then you end up having too much debt to service. Number two, you leverage so much of your house that you have to get mortgage insurance. And number three, if you don't consider the closing costs. So it really is an individual calculation with your credit score, the interest rate, what you're doing with the money, hopefully not spending it on a depreciating asset like vacations or cars, and then just how the numbers crunch for you. But it's a tool.
So, all right, so can you tell us the right ways how homeowners can tap into their home's value? What's the correct way and what's the ways that maybe don't make as much sense?
So when you think about homes, with the exception of a massive recession, your home is usually an appreciating asset, so it usually goes up over time. So if you're going to trade in money from your equity, which is money that you've already paid into your home, you don't want to kind of double tax yourself by putting it into something that lowers in value. So for instance, I think the stock market's a bit expensive to load into the stock market right now, but you want to put that cash into something that's going to give you a higher return of some sort, or it's going to improve the equity in your home, or it's going to consolidate your debt, are kind of like the top three things that you want to do. You do not want to take equity out of your home and buy cars and vacations and things that are sort of transient in one's life, because you're not increasing your overall wealth if you do that.
But if, for instance, you have a lot of credit card debt that's at 18, 21%, something like that.
Exactly.
It's a good idea maybe to use a lower interest rate on this kind of a loan to pay that down, so long as what?
So long as, right. So long as you don't run the credit cards back up, and then you have both payments to make. And then the other thing is depending on where you sort of hit that level of being able to write off and make your mortgage interest tax deductible. Credit card interest is not tax deductible. Mortgage interest up to a certain amount is deductible. So you can actually lower your income. You can take your credit card debt and reduce your income. So there are different strategies, but you really have to look at the fine print. You have to make sure you don't have to buy mortgage insurance, understand the closing costs, and really crunch the numbers before you pull the trigger. And in general, the society is over-levered. So if we do hit a recession, your home value can fall. You don't want to be upside down. Or if you are upside down, you want to be able to weather that storm. So these are things to consider. Now,
the new tax laws, they do impact how much you can write off from home equity loans. But you said that's for a very specialized part of the population. Right?
Well, it's a certain amount. So it's the higher end mortgage.
Good advice, as always.
Thank you.
Frances Stacy Newton Stacy, thank you so much.
Thank you.